Romania is a beautiful Eastern European country, and we have some amazing food like cabbage rolls, which we call sarmale. We also have papanash, which is essentially a fried donut with jam and sour cream, absolutely delicious. We also have wine that is produced in one of the oldest regions in the world, and it's dating back as much as 6,000 years ago during the Dacian times. And another fun fact about that is that we actually still produce wine in that same region even today.
Wow. So why don't I ever see can I go to the liquor store here and get some?
I think you can now, actually. Yes.
I will look for it.
I'll have to send you a link.
Okay. I think we need to stop the podcast here. We need to go get some delicious food and some good wine.
Why not? Why not?
Welcome. This is Uncommon Sense, a CPA podcast presented by the Heshe CPA Knowledge Center. The center is an initiative of the CPA Education Foundation, the charitable arm of the chartered professional accountant profession in Alberta. For the record, this CPA podcast isn't about bean counting. Our episodes feature conversations with Alberta CPAs sharing their insights on a wide range of timely topics.
Welcome back to Uncommon Sense. We're here with Antonia Stiuca, CPA, for some more advice and tips on the 2024 tax season. My name is Erin Schwartz, and I am the host for this episode. Welcome back, Antonia.
Hi, it's nice to be back. We had so much fun for part one, so we're back with part two.
Here's a question that I'm sure comes up every year for folks, especially as personal circumstances may change. Can people claim deductions for their own personal or their immediate family medical or dental expenses, as well as prescription drug costs?
Yes, you absolutely can. And I actually have some pro tips for you as well, Erin, to maximize your claims. So when it comes to medical expenses, there's actually a threshold that needs to be met. And that threshold is either $2,759 in 2024 or 3% of your net income, whichever amount is lower. So this is actually sometimes why you may see that you have a tax return that you receive from your accountant, and you notice that there might not be any medical expenses claimed on your tax return. And in that scenario, it's probably because you didn't have enough amounting to that, either $2,759 or 3% of your net income. So again, your accountant looks at that, but you have to meet that threshold in order for you to be able to claim any medical expenses. Now, when it comes to actual expenses you can claim, CRA has an extensive list of a lot of different medical expenses. And if you are actually claiming medical expenses, I highly suggest to visit the CRA website because it has a very comprehensive list. And when it comes to what you can claim, anything from prescription medication, medical devices, vaccine costs, and actually in some situations, you can even claim travel costs if you have to travel for your appointments for treatments. So again, CRA is a great place to visit to be able to know whether you can actually claim your medical expense bill. And the key here is to keep records. You probably heard this many, many times. Accountants really emphasize this, that you need to keep records for all your expenses. And what I like to suggest to my clients is that if you have a pharmacy of choice, so let's just say you go to one pharmacy for all your prescriptions, then you can actually request a detailed printout of all your purchases throughout the year, so that makes record keeping a lot easier as opposed to keeping the receipts in a box somewhere that you may not be able to find. And I have some other pro tips here as well when it comes to medical expenses. So it's best to actually combine all the medical expenses for all your family members. So let's just say you have a spouse, you have a child that is a minor, you can actually claim all of those. And what I recommend is that you claim all the medical expenses under the lower income earning spouse, because that's how you maximize your tax credit. And another pro tip is that you don't have to pick or you don't have to claim your medical expenses from January 1st to December 31st. You can actually pick any 12-month period ending in 2024. And this is especially helpful in the situation that you may have forgotten about a big expense that you incurred in 2023, let's say. So let's just say that, Erin, you had a big dental bill in September 2023, and you forgot to claim that on your 2023 tax return. Well, you can actually pick a reporting period in 2024 that starts in September 2023, maybe ends in August 2024, and you can capture that big dental bill that you forgot about in 2023. So you can actually claim it this year, which is fantastic. So again, you just have to be a little bit strategic about how you claim your medical expenses, and you can make the most of this credit.
Mm-hmm. Yeah, that's what I am more familiar with. We have kind of a beast of a spreadsheet, to be honest with you, tracking all this stuff, because my partner and I both have insurance coverage, but it doesn't necessarily cover everything. And so it's like, what's the expense? What was covered here? What was covered there? And then what was submitted to health spending? And then what's left over? And then so at the end, then we do the sum of it all to see, do we meet the threshold and play around with the yearly timing if we didn't.
You're so organized. I love that.
Well, it just became kind of a necessity when I didn't have insurance coverage for a while and had some higher medical expenses. And it was like, hey, let's get the benefit of the credit.
That's amazing. You're a poster child for this.
It's a lot of administrative burden. It's hard to keep up with as they come in, but then it's also hard to go back and do it all at once.
Yeah.
But it is, if you get a significant credit out of it, it can be so worth it.
Exactly. Yes, absolutely.
So, this is probably one area where I am the poster child for tax returns. I am generally not very on top of it. So it's my one area. So you mentioned if you didn't claim a medical expense last year, and you know there is a way to get that in on this year's tax return if it works out in the correct way. Someone who made a charitable donation in 2023 but forgot to claim it when they did their taxes. Maybe they did claim other charitable donations, but they just missed one of their receipts. Are people in that situation allowed to claim donations made in prior years?
Yeah, absolutely. You can claim donations. What usually happens is that you can carry forward your donations up to 5 years. So in the situation that maybe in 2023 you forgot about a donation and you didn't claim it, you can actually carry it forward in 2024 and claim it in the current tax year. Let's just say that 2024 is our current tax year. And let's just say that you don't want to do it in 2024. Well, you still have the option of carrying it forward even 4 more years. So essentially in summary, yes, you can carry forward any donation receipts you might have forgotten about for a total of 5 years. And something else that I wanted to mention as well for this is that a lot of people don't know that donations are eligible for a tax credit. A lot of people love to donate to their favorite charities, and they don't even communicate to the accountant that they have such receipts, which is a big miss, right? Because you can actually still donate to your registered charity of choice, and you can still get a tax credit, which is fantastic for your tax season. So when it comes to that, I always recommend to my clients, and what I do is actually I send them a checklist. So if you did donate, no matter how much, you let your accountant know. That's what I would suggest. And another thing that I wanted to mention for this as well is that before you donate, make sure you donate to a registered charity if you want to get that donations receipt. Because if you don't, then the charity may not be able to issue a donations receipt, an official one, and you may not be able to claim it at all. So CRA has a online search tool, so you can actually go on their website and search for your charity to see if it's actually registered. So that's one component that I always suggest for everyone to check to make sure that it does qualify.
Yeah, that's a great tool to have it all in one place. And your tax receipt should have on it a registered charity number as well, right?
Yes, that's right.
Okay, so if you're not seeing that,
that's a red flag.
That's a red flag. Maybe go to CRA and search and see what you can find.
Yeah, absolutely.
Okay. I can't help but add in a shameless plug that the CPA Education Foundation is a registered charity, and we do accept donations for all the good work we do in our communities.
Can I also say something about that too, Erin? This year, the federal government gave all taxpayers a little bit of an extension for your donations to charities. So usually what happens is that the reporting period for charities is January 1st to December 31st. So if you make any qualifying donations to a registered charity, you can claim that as a tax credit. However, because Canada Post closed for a period of time towards the end of the year, they actually extended that deadline. So let's just say that somebody comes and donates to your foundation or charity. Then if they donate up to February 28th, 2025, they can still claim that receipt on their 2024 tax return, which is a great little extension to think about. And we're filming today. It's February 27th. I know this may go out a little bit later, but just keep that in mind. If you donated anything in January or February, you can still use those receipts.
Right. But then you have to be careful and make sure that next year, if you claim those on 2024 tax return, don't claim it on your 2025 tax return, right?
Yes, absolutely.
Same as like with the RRSP contributions.
Exactly.
Similar.
Right on.
With the deadline. Okay. Yeah. If you donate more than a certain amount, you end up getting about 50% back, don't you? Between the federal and, again, we're Alberta, but between the federal and provincial credits, it's not like other credits at the lower rate, right?
Yeah, that's a great point as well. So Alberta has the highest rate for donations. So we have the highest donation tax credit in Canada. So in Alberta, for the first $200, you get 75% of a tax credit back. And when you combine that with the federal, that's amazing. When it comes to federally, if you donate over $200, then you get 29% of a tax credit. So it increases with your amount that you donate. So it's always great actually to combine receipts with your spouse too, to be able to maximize that at the federal level. However, at the provincial level, the first $200 is actually receiving that higher tax credit, whereas the more you donate, it reduces. Exactly. It is the opposite.
Yeah. Okay. Interesting. So you mentioned being able to utilize donations if you haven't claimed them for a period of 5 years, kind of carry forward. We talked about if you forget or miss a receipt, why that, might happen. But if you didn't, so the advantage, though, to doing that on purpose, deliberately, would be maybe in a year where you did donate, but you had really low income and maybe even you're not taxable or very low marginal tax rate, then you might save it for a future year when you're anticipating higher income.
Exactly, yes. And because at the federal level, the more you donate, the higher of a tax credit you receive, that could also make sense in that situation. So at the federal level, if you donate more than $200, then you get a 29% tax credit back for your donation. So it might actually be useful to accumulate enough receipts so that you can get that higher tax credit.
Right. Combining years to just get it as high as possible kind of thing. Thank you. So are there any new or changed deductions or credits that you think Albertans should be aware of this year?
So when it comes to changes that Albertans and Canadians really need to be aware of, CRA likes to adjust tax credits for inflation as well as certain tax deductions. So the first one really that is relevant for all of us because we all get it is the basic personal amount. This is the amount you get before you pay any federal taxes. And this has gone up from $15,000 in 2023 to $15,705 in 2024. So that means that for the first $15,705 of earned income in Canada, you actually don't pay any tax, which is fabulous. It increases every year with inflation. Now, in terms of Albertans specifically, there are a few things that are going to provide Albertans with a little bit of a tax relief. So in 2024, just like at the federal level, Alberta tax brackets and credit amounts have increased by 4.2%. And the government of Alberta has actually estimated this will provide Albertans around $980 million in savings in tax this year, which is a great amount. I mean, it's all positive. Alberta also introduced a new tax credit, and it's called the Skilled Trades Tax Credit. It started in April 2024, and this essentially applies for an individual who's moving to Alberta for a job in a qualifying skilled trade. And you could actually get $5,000 of a refundable tax credit. So that's actually money back in your pocket, which is, again, absolutely excellent. But to qualify, you also need to meet certain criteria. There's 3 criteria that need to be met. You need to be working full-time in an eligible trade that is listed on the Government of Alberta's website. You need to file your 2024 tax return in Alberta, which is, again, another great plug-in why you should file your tax return if this is something you may get, and live in the province for at least 12 months. So those are the 3 criteria that need to be met. But it's excellent because you really get $5,000 back in your pocket with this new credit.
That sounds great. Now, you mentioned that came into effect April of 2024.
That's right.
So does that have implications for like when folks moved to Alberta? If it was before then, after then, anything like that? Or is it so long as you just meet the criteria, you're good?
I think it does have implications in terms of the moving in date, but I always suggest with these new tax credits to go back to the website for Government of Alberta and check the qualifying criteria because they could change or they could be very specific depending on your situation. So I believe it does have a April 2024 effective date. So you must move essentially after April 2024 to be able to qualify for this tax credit.
Okay. And then you mentioned certain professions, certain trades. So can you give us a few examples of what is included on there? Do you know, like if I'm an accountant moving to Alberta, does that count?
No, unfortunately not. No, it's only skilled trades. And there's a long list, actually.
There's a long list.
Yes.
Great.
Yeah.
Okay. So on the other side of the coin, though, are there any previous deductions and credits that we were maybe used to getting every year that are no longer available to us?
Maybe not something that is no longer available to us, but something of note in Alberta. In February 2025, owners of electric vehicles now have to pay a $200 annual tax when they register their EVs or electric vehicles. And again, this is unfortunate, but the rationale is that electric vehicles are heavier than gas cars and may damage roads a little bit more, but their owners don't pay fuel tax. So owners of EVs will have to pay this additional annual tax when they register their EV vehicle, unfortunately.
Okay, interesting. But that would happen as part of your vehicle registration process.
That's right.
Okay.
Yes.
Now I don't drive an EV, but I register my vehicles for like 2-year periods, which is something you can do now. I wonder if they would presumably if you do that, you'd have to pay the 2 years worth.
And I'm guessing that if you got to register your vehicle before that deadline, you probably didn't have that tax being applied to your EV.
Yeah. Interesting.
I guess, again, timing. Timing is the essence in this case.
Seriously. Are there any other changes or tweaks to tax policy and rules this year that you think our listeners should be aware of when it comes to filing their personal taxes this spring?
Honestly, Erin, I think we did a pretty good job at covering most of them. So I wouldn't have anything to add here.
All right. So what can a person do if they left a job at some point in 2024 and haven't received a T4 slip and any other potential slips they maybe should receive from that previous employer?
Yeah. Losing things in the mail, always fun, hey? However, don't panic. That's what I would say. What usually happens with employers on an administrative level, employers are required to file your T4 by February 28th. And something that's new again this year is that it's been announced about 8-9 days ago is that employers actually have an extension this year to file your T4 slip. So they have until March 7th, 2025 to file that. So what that means is that it takes a little bit of time for that slip to get to you. So what I would suggest, if you haven't received your tax slip yet, maybe it's mid-March, then you can actually consider additional steps. But until I would say mid-March, don't worry about it. It's probably making its way to you in the mail. Now, if it's March 15th, let's just say, and it's still missing, then you have a couple of options. The easiest option is to go to the My Account on the CRA website, which I highly recommend for everyone to create an account on there because that's the place that hosts all your slips. So it's not just your T4 slip, it's any other slip that you may need to access for your tax season. So I highly recommend to go and register yourself on my CRA account if you don't have one already. So that's where you can actually grab your digital copy of your T4. Now, let's just say that you did go there and there's nothing. you don't have a T4 slip yet. And now you're kind of a little bit concerned at this point. So in this situation, you can actually reconstruct your T4. And what you have to do is essentially estimate your earnings, so how much money you made at the company you work for, and then also estimate how much tax and deductions your employer would have taken out from your paycheck. But in this scenario, is what could happen is that you're going to reconstruct your T4, and when you actually get your T4 slip in the mail, you might have to amend your tax return to make sure that you account for any changes. But with this particular example, it's recommended to reconstruct it so you avoid any late filing fees in that case. So I would say first step, really just wait a little bit until that slip gets to you. Second, check your CRA account. And if you find nothing there, then you can actually reconstruct it and amend it later.
So if you have pay stubs from all your paychecks, that would probably be really helpful in that reconstruction, hey?
Yeah, it's going to be obviously time consuming to do that, but it's best to do that as opposed to maybe owing tax and not kind of ignoring it until you get a T4. And in some cases, you might not actually get a T4. So it's best to do that. And again, in the rare case that you don't get a T4, then you can actually amend it later if you need to.
Okay. Are there penalties for the employer for not filing that on time?
There are, yes.
Because that doesn't seem fair.
There are, yeah, absolutely. And it really just varies on the amount of slips that you file. But yeah, absolutely. Your employer is required to abide by that deadline. But again, the fact that it has extended a little bit this year, they're not going to get any penalties if they file before March 7th. But that means that you might experience a little bit of delay when it comes to getting your T4 slip.
Right. Okay. So let's say someone's on top of things, they complete their return and discover that they owe money, not what they were anticipating, and they can't actually afford to pay it right away. What advice would you give to this individual, or what are some options available to them?
Yeah, CRA always wants to work with you. So in that case, again, don't panic. Make sure that you communicate this to CRA so that you can arrange a payment plan with them. So instead of actually paying a big lump sum that you may owe to the government, you can actually arrange with CRA to pay that amount over time in, increments. So with that being said, keep in mind that even though you may have a payment plan in place, you may still accrue interest on any unpaid balance. So while that is the best case scenario in a tight cash flow situation, you still need to keep in mind that interest continues to accumulate. So it's best to pay as much as you can as soon as possible so you get rid of that liability as soon as possible. And when it comes to actually setting up a payment arrangement, very straightforward. If you're a phone type of person, if you like to call CRA, which I don't recommend around this time of the year, they're very busy. You have to wait a long time. You can actually call them, provide them your information, your personal information, and they can set that payment plan over the phone with you. But if you prefer to do things online, you can actually set it up yourself through My Account on the CRA website, which is probably the easiest option. And again, another plug-in why you should have that CRA My Account, so you can do this a little bit easier.
Absolutely. Now, on the flip side, if someone is maybe not very on top of things and maybe they are listening to this podcast and it's April 25th, and they're panicked about the fact that they haven't started their tax return and are probably not going to get it done by April 30th. What advice would you give this individual to make sure that if they do end up owing, maybe they're not looking at interest, or anything they can kind of do to ease any potential negative consequences of filing late?
Yeah, I would always suggest to file as soon as possible to work with your accountant, really. And in certain situations, you may find an accountant who's willing to work with you, even on such a tight time frame. So if it's April 25th and your taxes are due April 30th, they might still be able to work with you and file your tax return on time. So you avoid interest and also penalties for not filing. And on top of that, you can also estimate how much tax you might need to pay. So let's just say that you're going to have an amount owing, but you're not exactly sure, to the dot how much that is. I would suggest, just pay it. And if you end up overpaying it, CRA will refund you that. But it's best to pay it and then not worry about penalties and interest and kind of leaving things hanging
Yeah.
and not doing it on time.
For sure. And again, that's of course assuming that you're in a cash flow situation that allows you to do that, hopefully.
Yes.
Yeah. Okay, maybe one final question for you, Antonia. Again, CPA Education Foundation, we are a registered charity, so we get donations, but we also give out a lot of scholarships. Maybe for any students out there listening, any advice on what they need to do if they did receive a scholarship in 2024?
If they did receive one, you know what? Scholarships are not taxable, so they don't have to worry about paying tax on that. But they do get a slip. I would suggest keep that for your records, but you don't have to pay any tax on that, which is fantastic.
So another plug for students out there, if you apply for any of our scholarships, it's not only free money, but it's tax-free. So make sure you check those out. Thank you so much, Antonia. I think that's a spot for us to wrap up. That's a lot of really good information for people to have. I know I learned a lot. I am a CPA, but I am not a tax accountant. So that was really interesting. Thank you so much for being such a wonderful guest and for telling us, giving us all these tips, as well as sharing some of your personal story with us. This time can be stressful for a lot of people. Giving those extra tips is really fantastic. It's been a pleasure talking with you.
Thanks so much, Erin. This was fun.
Yeah. And just one final reminder that Antonia has provided general information only, and this information is not to be construed as personal advice for anyone. If you have questions about your own tax situation, seek advice from your tax specialist, your favorite CPA.
The Uncommon Sense podcast is presented by the CPA Education Foundation and funded by the Heshe CPA Knowledge Center. The Knowledge Center was created through a generous donation to the CPA Education Foundation by the late Brian Heshe. Brian was a distinguished Albertan, business leader, CPA, educator, and community builder. His generosity and commitment to education underpinned his good works across Alberta throughout his lifetime. We would like to acknowledge that the CPA Education Foundation offices are situated on the traditional Treaty 6 and Treaty 7 territories and Métis Nation homeland. The Foundation acknowledges that we reside on traditional and ancestral territories of many Indigenous, First Nations, Métis, and Inuit peoples. Their histories and culture influence our community to this day. The CPA Education Foundation is committed to helping build a province where Indigenous people and their voices and experiences are heard, valued, respected, and celebrated. Technical and recording services for this podcast provided by Wolf Willow Studios in Edmonton. If you enjoyed this podcast, please be sure to like, subscribe, and tell your friends about us. If you have any comments on the podcast, write to us at cpaef@cpaalberta.ca. To learn more about the CPA Education Foundation and the Heshe CPA Knowledge Center, visit cpaalberta.ca/foundation. Thanks for listening.